Welcome back to another deep dive. We are really thrilled you're joining us today because we're tackling a topic that sits squarely at the intersection of, well, the two biggest tectonic plates in the global economy right now.
Right.
On one side, you have the exponential explosion of artificial intelligence and obviously the staggering energy demands required to sustain it.
Yeah, the power requirements are just massive.
Exactly. And then on the other side, you have the rapidly evolving, heavily scrutinized future of nuclear power. Today, we are looking at the exact point of impact where those two industries collide.
And it truly is the defining bottleneck of the tech sector today. I mean, you can design the most sophisticated AI hardware on Earth, but if you lack a reliable, dedicated baseload power source to plug those chips into...
You essentially own a warehouse full of very expensive paperweights.
Exactly. The grid, as it stands today, simply cannot handle the load we're projecting.
And that brings us to our mission for today's deep dive. We've been analyzing a really deep stack of financial models, technical engineering breakdowns, market sentiment reports, and regulatory filings.
A lot of paperwork on this one.
So much paperwork. And it's all centered on one highly debated company operating in this space, Oklo.
Oklo, yeah.
Our objective today is to cut through the noise, the hype cycle, and the very real fears to figure out if this company has the actual blueprint for the future of clean, scalable energy.
We definitely have substantial ground to cover to reach a definitive verdict. We're going to examine the underlying physics of Oklo's unique fast-fission technology.
Which is fascinating.
It is. It fundamentally flips traditional legacy nuclear models upside down. We'll also analyze their non-traditional business model because they're avoiding the standard hardware manufacturing route entirely.
Right.
We also need to unpack some highly notable board-level drama involving a major tech CEO and arguably the most crucial piece of the puzzle.
For regulatory hurdles.
The daunting regulatory hurdles they face. In the nuclear sector, the engineering is really only half the battle. Navigating the federal bureaucracy is the other.
So whether you are meticulously tracking AI infrastructure investments or exploring the transition to zero-carbon energy, or you're simply trying to read the tea leaves on where institutional capital is quietly positioning itself behind the scenes.
The smart money.
Right, the smart money. This deep dive is your ultimate shortcut. We're going to get you comprehensively informed on what is shaping up to be the most critical infrastructure narrative of the decade. Okay, let's unpack this.
To really grasp why a company like Oklo carries such a high valuation premium despite being so early stage, we have to look at the macro environment first.
Yeah.
The national transmission grid is buckling under the weight of modern computational demands.
I was reading through the macro reports you pulled for us, and the numbers are just staggering. We're looking at the White House placing a heavy emphasis on a $9.7 trillion with a T dollar energy portfolio. But how much of this demand is actually being driven by AI versus just standard municipal grid expansion?
The lion's share of the marginal growth is being driven almost entirely by hyperscalers. It's a fundamental paradigm shift in power density.
How so?
Well, a traditional data center rack might draw anywhere from 10 to 15 kilowatts of power. However, when you look at an NVIDIA DGX rack, utilized for training large language models, that density jumps to upwards of 120 kilowatts per rack.
Wow.
Yeah. The infrastructure built in the 70s and 80s was just never designed to deliver that kind of hyper-concentrated power to a single suburban warehouse.
Which is where Oklo enters the equation with their flagship product, the Aurora powerhouse.
Yeah.
Now, the baseline output for these microreactors is listed anywhere from 15 to 75 megawatts electric, or MW. Wait, 75 megawatts sounds like a drop in the bucket compared to those legacy gigawatt-scale plants we're used to seeing. Is that actually enough to power these new hyperscale data centers? Or are tech companies going to need a dozen of these things daisy-chained together?
What's fascinating here is that the smaller output is a deliberate, highly strategic design choice.
Really?
Yeah. Unlike legacy plants that push gigawatts onto the national grid.
Which requires billions of dollars in new high-voltage transmission lines.
Exactly. Oklo's reactors are perfectly sized for off-grid localized deployment. They're completely self-contained systems.
Oh, I see.
A tech giant can effectively co-locate an Aurora powerhouse directly adjacent to a new AI training facility.
Just build it right next door.
Right next door, and provide it with dedicated, uninterrupted baseload power, bypassing the chaotic interconnection queues of the national grid entirely.
That localized isolation is the ultimate prize for these hyperscalers. But the engineering breakdown highlights another element that seems to be their true competitive moat. The fuel, yes. Instead of just burning traditional enriched uranium, the Aurora utilizes fast-fission technology. I understand this is essentially a waste-to-watts process, but how does fast-fission actually differ from the thermal reactors that have been operating for the last 50 years?
It comes down to the speed and energy of the neutrons sustaining the reaction. Traditional legacy reactors use moderators, typically water, to slow down thermal neutrons.
Okay.
The problem with that process is that it leaves behind a significant amount of unspent, heavier isotopes.
The long-lived actinides.
Yes, the long-lived actinides. That is the hazardous waste that sits in cooling pools for decades. Fast reactors, like the Aurora design, use liquid metal cooling instead of water.
So the neutrons don't slow down.
Exactly. This allows the neutrons to remain highly energetic. Because they are moving so fast, they have the kinetic energy required to actually split those leftover heavier isotopes.
So it literally consumes the very waste that traditional thermal plants leave behind.
Precisely. It's an incredibly elegant application of physics, and the economic implications are profound.
I bet.
First, utilizing stockpiled waste significantly drives down their long-term fuel costs compared to legacy operators or even modern competitors like NuScale Power and Westinghouse.
Because they still rely on fresh, enriched uranium.
Right. But perhaps more crucially, it insulates Oklo from a notoriously fragile geopolitical supply chain.
And the timing on that insulation could not be better. We're seeing severe pressures on the global uranium sector, specifically tied to escalating Middle East tensions noted in early March 2026.
It's a huge vulnerability.
The Western world is still heavily reliant on foreign enrichment capabilities, particularly from state-owned enterprises in adversarial nations.
When geopolitical conflicts cause spot uranium prices to spike, traditional operators absorb a brutal financial hit.
But Oklo sidesteps that volatility.
Exactly, because their initial fuel source is the spent nuclear material already sitting in dry casks domestically.
Domestically, right.
Furthermore, to fortify this advantage, the financial filings outline a recent joint venture with a firm called NuScale.
NuScale, yeah.
This partnership is specifically designed to secure vital fuel fabrication intellectual property, ensuring Oklo builds a wide, defensible moat around their proprietary recycling process.
The engineering feels like a massive leap forward.
Yeah.
But we need to pivot from the physics lab to the balance sheet.
Always back to the numbers.
Always. Because having revolutionary tech is vastly different from operating a viable public company.
Yeah.
And this brings us to a rather stark financial reality. Currently, Oklo is an entirely pre-revenue entity.
Yes.
Pre-revenue is Wall Street's polite way of saying they are currently a giant nuclear-powered vacuum cleaner for investor cash.
That is an accurate, albeit blunt, assessment.
Yeah.
The term pre-revenue causes traditional value investors a great deal of anxiety. They generate zero sales.
Zero.
Their free cash flow is deeply negative, driven by the monumental research, development, and licensing costs required in the nuclear space. They are surviving off their cash reserves.
And equity financing.
Right, and they remain highly dependent on continuous equity financing and strategic federal partnerships.
Specifically with the Department of Energy.
Yes, to fund operations until deployment.
So you have an enterprise burning through capital, generating zero income, attempting to commercialize nuclear reactors. On paper, that reads like a catastrophic risk profile.
It does.
Here's where it gets really interesting.
Go for it.
They may lack current revenue, but they possess a staggering 15-gigawatt order book.
15 gigawatts.
To put 15 gigawatts into context for this sector, a state-of-the-art AI training cluster might pull 100 to 500 megawatts.
Right.
So a 15-gigawatt order book means Oklo has essentially pre-sold the electrical output for dozens of the most advanced computing facilities on Earth.
It's massive.
And the clients in the queue. We're talking about Meta, Switch, Diamondback Energy, and Wyoming Hyperscale.
The composition of that order book requires a deeper look, as it represents a fundamental pivot in how nuclear energy is monetized.
How so?
Oklo is not operating as an engineering, procurement, and construction firm. They are not manufacturing these Aurora powerhouses to sell them off to Meta or Switch as capital equipment.
So who owns the plant?
Oklo retains full ownership of the physical asset. Instead of selling the hardware, they sell the electrons. They are locking these hyperscalers into 20-year power purchase agreements, or PPAs.
A 20-year contract at a fixed or escalating rate.
Exactly.
That removes the massive liability of operating a nuclear reactor from the tech company's balance sheet while giving Oklo guaranteed income.
If we connect this to the bigger picture, This strategy fundamentally alters Oklo's terminal valuation.
Oh, I see where you're going with this.
They evolve from a cyclical hardware manufacturer,
Constantly pressured to find new buyers for billion-dollar machines.
right, into a highly predictable utility business. Once an Aurora plant achieves commercial operation, those 20-year PPAs provide exceptionally scalable, recurring cash flows.
It's a huge shift.
It requires a formidable upfront capital expenditure, but it yields decades of bankable revenue. The operative words, however, remain if and when they actually flip the switch.
The timeline is the multi-billion-dollar variable. And as with any high-stakes infrastructure play, the boardroom dynamics are just as fascinating as the technology.
Oh, absolutely.
We need to discuss the Sam Altman connection. In April 2025, Sam Altman, the CEO of OpenAI and arguably the most influential figure driving the AI boom, stepped down as chairman of Oklo.
Whenever a figure of Altman's magnitude exits a board seat, it generates immediate market turbulence.
People panic.
They do. But the nuanced context is critical here. He did not resign due to a loss of conviction in the fast-fission technology.
Oh.
The filings indicate he recused himself explicitly to eliminate conflicts of interest ahead of OpenAI's own monumental energy procurement negotiations.
Wait, so he steps down from the seller's board so he can sit cleanly on the buyer side of the table.
Precisely.
OpenAI is rumored to be planning data center projects that require gigawatts of dedicated power. Microsoft and OpenAI are scouring the grid for capacity.
Exactly the implication. His recusal suggests a strong pre-existing insider alignment. Naturally, this has ignited rampant speculation across institutional desks regarding a massive impending power supply agreement directly between OpenAI and Oklo.
Which would be huge.
If OpenAI taps Oklo to power its next-generation training clusters, that serves as the ultimate, indisputable validation of the Aurora technology.
Despite that underlying narrative, the broader market seems to be suffering from whiplash. The quantitative sentiment score on the stock right now is hovering at a flat neutral.
Very flat.
Nobody is screaming to aggressively accumulate, but there is no panic selling either. Adding to this ambiguity, Barclays recently slashed their price target on Oklo by nearly half, dropping it from $146 down to $82.
That caught a lot of attention.
How does that math work? You have an institutional bank slashing the valuation by roughly 40%, yet you are telling me there are hidden bullish signals in that report.
It requires looking past the headline number. A severe price target reduction will predictably trigger algorithmic sell-offs and retail anxiety. However, the underlying mechanics of the Barclays report tell a different story. Despite cutting the target to $82, Barclays maintained an overweight rating.
Overweight.
Yes. This indicates they still project Oklo to comfortably outperform the broader market benchmark.
So why the cut?
The target reduction was merely an adjustment to their discounted cash flow models, recalibrating the timeline risks and the delayed onset of those PPA revenues, rather than a condemnation of the technology itself.
And if we look over at the options market, the derivatives data paints an even more aggressive picture.
The options flow is incredibly revealing right now. The data shows heavy institutional accumulation.
The smart money.
But the smart money, exactly. They are betting aggressively on long-term Oklo call options. While retail investors remain paralyzed by the neutral sentiment and the short-term volatility stemming from broader uranium sector pullbacks.
Hedge funds are buying.
Hedge funds and institutional players are quietly absorbing the float. They are positioning for a definitive breakout, effectively looking past the current noise and focusing squarely on the upcoming regulatory catalysts.
If the smart money is positioning for a breakout, we need to map out the actual roadmap. The strategic target is clear.
2028.
Right. Oklo projects meaningful PPA revenue to finally commence with commercial operations in 2028. That is the inflection point where they transition from a cash-burning R&D lab to a cash-generating utility.
But the path from today to 2028 is heavily fortified with federal red tape.
Yeah, it's not a straight line.
And we must emphasize the severity of those roadblocks. This constitutes the primary bear case against the stock. The Nuclear Regulatory Commission is intentionally the most rigorous regulatory body in the federal government.
Understandably so.
Furthermore, Oklo's historical relationship with the NRC is not without blemishes. In 2022, the NRC outright denied Oklo's initial combined license application.
So, what does this all mean? When you suffer a federal denial in an industry where engineering failures carry catastrophic consequences, how does an emerging company rebuild that trust and realistically maintain a 2028 commercialization target?
It's tough.
I understand they submitted a rather novel performance-based application framework instead of the traditional deterministic safety data the NRC is used to seeing for legacy light water reactors.
That was the core issue. The 2022 denial was a harsh lesson in bureaucratic alignment. The NRC required extensive probabilistic risk assessments that Oklo's initial streamlined application lacked.
They try to move too fast.
Exactly. However, the recovery is where the short-term catalysts lie. Oklo has aggressively adapted to the NRC's rigid expectations.
They learned their lesson.
They did. The latest updates highlight their successful 2025 NRC pre-application readiness checks, demonstrating that they have rectified the data gaps from the previous cycle.
That's a huge green flag.
In addition, they recently secured a Department of Energy fast-track selection, which injects substantial federal tailwinds and technical resources into their deployment schedule.
Beyond the paperwork, there is a tangible physical milestone rapidly approaching. The engineering teams are currently constructing the Aurora demonstration plant at the Idaho National Laboratory.
Yeah, I know. Yeah.
According to the deployment timeline, this demonstration reactor is slated to go critical by July 4, 2026.
That July 2026 criticality date is the definitive inflection point for the enterprise.
Make or break.
Absolutely. If the Idaho demonstration plant successfully sustains a chain reaction and proves the fast-fission waste recycling process operates safely at a commercial scale, it effectively neutralizes the technological risk premium priced into the stock.
That they prove it actually works.
Exactly. From a bureaucratic standpoint, the next major hurdle is their updated regulatory filing expected in Q1 of 2026, which will lay the legal groundwork for that July demonstration.
The tension is just palpable. You have this incredible futuristic engineering promise colliding with the agonizing methodical pace of federal nuclear oversight.
It's a clash of two worlds.
It really feels like the entire enterprise is building toward a massive crescendo over these next 24 months.
This raises an important question for any investor or technologist monitoring the sector.
What's that?
Is the current neutral market sentiment, which is heavily suppressed by regulatory fatigue and pre-revenue anxiety, actually masking a deeply undervalued multi-year compounding opportunity? When you weigh the underlying fundamentals of a 15-gigawatt hyperscaler order book against the current valuation, the disparity between present sentiment and future utility is striking.
Which brings us to the final verdict derived from the financial models we have unpacked today. The synthesized consensus awards Oklo a 7 out of 10 bullish score.
A solid 7.
Yes, it remains a purely pre-revenue entity with a high cash burn rate. Yes, the regulatory gauntlet leading up to 2028 is unforgiving.
Very unforgiving.
But it is nearly impossible to dismiss a 15-gigawatt backlog from the most capitalized technology companies on the planet. Couple that with their undeniable progress alongside the Department of Energy and that proprietary waste recycling economic moat, and Oklo offers a uniquely compelling narrative.
It does.
It represents a foundational play in sector rotation, capital seeking the physical infrastructure required to sustain the AI revolution.
And that infrastructure bottleneck is precisely why understanding Oklo's trajectory is crucial for you, the listener.
It really is.
Monitoring this company extends far beyond tracking daily stock ticker fluctuations. It's about observing the real-time development of the physical blueprint required to power the next epoch of human computation.
We can't just keep doing what we've been doing.
No, we simply cannot layer the immense demands of the artificial intelligence era onto an outdated, carbon-heavy transmission grid from the 20th century. The future requires localized, highly scalable, zero-emission baseload power.
It's the defining constraint of the modern tech boom, and Oklo is engineering the most ambitious solution we have seen to date.
As we conclude today's analysis, I want to leave you with a final lingering thought regarding their fast-fission technology.
Go ahead.
If Oklo successfully validates this model at commercial scale...
In Idaho.
Right. If they genuinely achieve the capacity to process decades of hazardous, stockpiled actinides into the very fuel that sustains our most advanced AI networks, does the global perception of nuclear waste undergo a fundamental inversion?
Oh, wow.
Does a material we have historically treated as a monumental environmental liability suddenly transform into one of the most lucrative, fiercely contested energy resources in the global economy?
An incredible paradigm shift to consider. Transforming hazardous liabilities into highly coveted assets, but executed on an atomic scale.
Exactly.
Thank you so much for joining us on this deep dive. Keep questioning the world around you, keep looking for those hidden connections, and we will see you next time as we unpack another fascinating topic.